Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
All right, hello and welcome to Moving Iron Podcast. This is just the Moving Iron Podcast brought to you by John Deere. We've got Greg Machinier, Pete Peterson on to talk about what's happening in the marketplace. Greg, how you doing today?
I'm doing well, Casey. How are you?
Doing good, man. Doing real good. We had getting some rain up your way. You guys?
We've had a little bit this last week, and today, as we're recording on Monday, it's about ready to start right now, and then we got some big stuff coming this evening. So when we need it up here, it's pretty dry, so it'll be hopefully a good deal. How about you guys?
Yeah, we're down in Kansas City today, and there's had a storm all night last night, and then storming this morning yet. So we get some good moisture down here. We're supposed to get rain and where we're at, but I'm not going to hold my breath on that one. And
yeah,
see what happens.
Definitely should have got into the weather predicting business, man. Yesterday it was 61% chance of rain in the afternoon, and it was sunny. It was like, what the hell? What? I mean, can you guys and gals be accurate? But no, hey, no offense, weather people. Yeah. I know it's very difficult. So,
yeah, it's not as easy as it sounds, but still, a 61% chance you feel that's a pretty good chance that you're going to get some rain.
I think so, right? Yeah. You know, and it wasn't even cloudy, and I was like, well, okay, I guess it just changed. So that's. Mm-hmm. You know, if you can be right half. Well, I suppose it's like baseball. If you bat 300, you're Hall of Fame, and it's like what? That's 3 out of 10. So, maybe I should stick to predicting. Let's just stick to our machinery end.
There you
we
go.
have enough issues going on there.
Yeah, for sure. Well, talk to me a little bit about this Kubota you saw Saturday. We were talking about before we started.
Oh man, I tell you what, Casey, we saw some really strong prices Saturday around the country. And the Kubota, that was out of Scottsville, Kentucky, sales by Mills Real Estate and Auction. It was a farm auction. It was a very nice tractor, but it was a 2011 Kubota M9540, which we see a fair amount of those. Now, it was a two-wheel drive, a little unusual there, sold with a loader. It had 4,524 hours on it. And I think the hammer price on it was $41,500. And then I think it was a 10% buyer's fee, so it came out to like $45,650, which if you go to machinerypete.com and hop in the auction data, auction prices, and filter it, that's the second highest auction price ever on an M9540. And for perspective, the only one that was ever higher was back in 22, which of course, you know, our data kind of screamed that was the absolute top of the used equipment market and the supply chain mess. But we saw one for $47,250. But that one only had 576 hours on it. It was a mechanical front with a loader. So again, Saturday, two-wheel drive, 4,500 hours, $45,650. Now it was pre-def, 11 model. And these two-wheel drives, Casey, with, you know, if they're like 15 years or basically pre-def and older, boy, the last 3-4 years, the values have just gone up on them so much. People just, I don't know, just prefer them. But this was a heck of a sale there Saturday. And again, that was in Kentucky.
Yeah. You know, the two-wheel drive market's always been kind of seems like it comes in waves, right? It's especially when you're looking at cabless two-wheel drive tractors, right? Like most of the time, a lot of cabless tractors get sold two-wheel drive, and because it's a budget thing. Sometimes I think when you're looking at it when they're new and what they turn into. Other side of it too is just kind of what are you going to be doing with it when you're there. But the watching these two-wheel drive tractors sell, like you talked about over the last couple of years, it's been very impressive to watch how much the draw to those tractors, right? And I think also too where they're at has a lot to do with the two-wheel drive market as well. When you get back east into southern Indiana, Kentucky, West Virginia, kind of over into southeast Illinois, those kind of places, you see a lot of two-wheel drive tractors getting sold over there, especially that smaller horsepower range.
More popular, right?
But yeah, a lot more popular in that area. But that being said, I've been around a lot of cabless front foot tractors too, and they're not. I mean, it's kind of hit or miss where you're at as far as they go. And I can't tell a big difference between them when you're talking about 50 horsepower. It's not like it's a big game changer.
Well, we had the Kubota was almost a record, second highest. We did have a record on a two-wheel drive. Another sale Saturday in Berger, Missouri, our friends at Schneider Auctioneers had their big spring online sale, and they had a couple tractors off a local estate. And one was an '04 John Deere 7320 two-wheel drive. Now, only 195 hours on it, one owner. So, I'm just guessing the folks bought it, 22 years ago, maybe for tax purposes, maybe to mow or whatever. Just maybe they got sick, didn't use it. I don't know. But again, 195 hours. It sold for $106,900 Saturday. And for perspective, going into that sale, the highest I'd ever seen on any 7320 two-wheel drive or mechanical was $93,062 on a Ritchie Brothers auction. That was back 7 years ago this month in Alberta, Canada. So again, you're talking about, 195 hours. So it's basically like new. It's everyone's dream. Here's a pre-def 20-plus-year-old tractor, 195 hours, one owner. But it went, let's see, about 14,000 over the record when times are tough. So again, I think it speaks to, like we keep talking about every week, the focus is just on the used market. And that same sale, by the way, Casey, had an '08, another pre-def John Deere 7730. This one was mechanical front, but same deal, 257 hours, one owner. And that went 162.7, that's the second highest auction price ever on a 7730. So hats off to Schneider Auctioneers, a great auction company down there in Missouri. They had a heck of a sale Saturday.
Yeah, that's I think it kind of goes back to what we've been talking to about, since you and I started doing this together, is the pre-def stuff. It's selling well, and we're seeing good movement there. It also goes to showcase where the price of equipment's at now comparatively to new, and how that stacks up. And we're seeing that there, and that, we're continuing to see, if you look at inventory level wise, we continue to see the biggest pinch in the marketplace right now is that 1 and 2 year old stuff, which is the most expensive stuff out there, right?
Yeah.
And that's going to continue to be a problem, and we're going to watch those things move. And I don't want to say continue to be a problem like somehow it's not going to work its way through. I think as we get through this next order writing period with all the manufacturers, you start looking at 26 delivery stuff. I'm sorry, 27 delivery stuff. I guess we're in 26 now. Time flies. But you start looking at 27 delivery stuff, you're not going to put that much stuff back out there again, which then is going to create this kind of limited pool. And a lot of conversations I'm having with folks are, in case we've got 1 and 2 year old stuff and 12 year old stuff, and that stuff in the middle we don't have. And that's where that flow of equipment's got to start moving to bring that stuff into the marketplace. Funny thing about this, you and I were talking about this before we got started, and I pulled up that Kubota just to see, how many are out in the marketplace. In the last 90 days, and I've never seen it like this inverted. Now, I'm going to be the first one to tell you that I'm not a Kubota expert by anyone's imagination, but when you see that there are 18 in the last 90 days, 18 listings on the retail side, retail advertised listings, and 27 auction listings in the last 90 days for the same tractor, that's starting to point to a couple of things. One is, what's your dealer base look like and those kind of things. But the other thing it's starting to point to is that more and more people are looking at auction as a viable opportunity to move their equipment. Even when we start looking at buyer fees that are associated with this. I mean, a lot of cases you see a 10% seller's fee and a 10% buyer's fee, right? And that's so you're looking at 20% of the value of the machine that's out there is being kind of tossed back and forth one way or the other. That is when I first started in this business, having the buyer's fee was like the third rail of politics. You don't want to touch it, and it was. But now it's just a natural part of it, and you're seeing more and more people look at auction as a viable way to get, especially on the older stuff, to get rid of their equipment.
Yeah, I think in a way, given that dealers, the inventory has been paring down since 24, 2 years, but no question the number of auctions has increased. And I haven't run the very latest numbers, Casey, but I believe through February into March, we were looking at, it was a 5.5% increase in the number of auctions versus 25. So more farmers retiring, more farmers having to move a few pieces. It's just, the focus to me it's as clear as on the used market. Now, a couple other examples, Saturday, so 2 days ago when we're recording this, but let's go to a nice farm auction in West Virginia. Now, I don't see a million farm auctions in West Virginia. Over 36 years I've been doing this, generally speaking, you would say equipment would be a little lighter there. But a very nice sale Saturday was for David Atkins. Sale was by Chuck Marshall Equipment Auctions. He had a Massey Ferguson 4707. It was did have a loader, $900 on it, nice rig, and it brought 54.5. And guess what? Record all-time high auction price out of West Virginia on a Massey 4707. Now, I believe 4707s, I think, were made, give or take, around 16 to 23. So now it's not pre-def, but again, the gap between that really nice Massey 4707 and what if you wanted that new horsepower, which that's what people keep saying as I interact with them. So in that 54.5, the previous record was 52,000. By the way, that same sale, Casey, how about this? A 94 model Deere 7600. Now, it was a mechanical front, but it had 8,309 hours on it, no loader, just a nice farm sale. And it brought $69,000. Now, when you go into our auction sale price data, machinerypete.com, and you start poking around in there, you're going to find that's the highest auction price ever on a 7600 with over 4,000 hours. And this had 8,309 hours out of West Virginia. So now, again, it's 32 years old, 94 model. But like you say, the focus right now when dollars are tight, I think you're right. Farmers are scouring the auction market. There's a lot of good equipment, and they value the farm retirement, the farm estate sale. You're getting that, in this case, the David Atkins premium, because he took great care of his equipment, had clean stuff, and so his Massey 4707 went for 54.5.
Yeah.
People can sit back and say, well, that's ridiculous. It's not ridiculous. It's what the market is. People were bidding on it from all over the country, and that's what it brought. And that's, focuses on good use right now, no question.
Yeah. And I will say this is for as typically when you're in a high auction period and you see a lot of auction going on, it's typically deal liquidations and, they're doing this kind of thing. We're not seeing that right now. That's not what's driving the marketplace. It's farm retirements and forced sales and those kind of things, and that's driving the marketplace. One thing I'll say about that is that's the difference between this current auction period and, say, the auction period that we saw in 22, 23, 24, right? That was highly consolidated liquidation sales, those kind of things, which compress the marketplace. What we're seeing sell right now is actually keeping the auction market up, and it's actually keeping the values up on equipment up.
Yeah, one thing that was interesting. So up here, I'm a Minnesota boy. A lot of dairy. Historically, there was a lot of dairy, and of course, our neighbors in Wisconsin, the dairy state, literally. Now we've lost an insane number of dairy farms. Just got crunched out over the last 5 years, 3 to 5 years. And I remember looking at our auction pricing coming in, Casey, even out of Wisconsin a couple of years ago, and I would look at the prices and go, those are strong across the board auction prices. As this pressure on the dairy industry was crunching down and weeding out dairy farms, a very difficult situation. And it, like you said before, it was kind of the first time you get this disconnect where, like, you get this rush of dairy auctions and you think, oh, all this stuff's going to be selling cheaper. But the opposite was happening. It was actually going for more money. Mm-hmm. And to me, it just goes back. What everyone keeps saying is, well, Pete, if that John Deere 7600, what's the horsepower on that? Or that Massey 4707 or the Kubota? What's a new one cost at that horsepower? And that number is just so high that it's making these good used ones, hold their value just exceedingly well.
Yeah. Yeah, it's interesting to watch this particular scenario take place because it's not like it's been in the past, right? And we're seeing this. I'll tell you one thing that concerned me, Greg, as we watch this kind of matriculate through. It's what we're going through right now. When this next order writing period comes through, and probably less new machines going to be sold this year than it was last year, right? Not by a bunch. It's going to be a little bit, but at best it'll be flat. You start looking at the number of machines that get put on the marketplace and the gap that's in the middle. That's what really concerns me about the marketplace right now, is the gap that's in the middle. And, what the drive for which you see those things, it's almost like this is going to be that the stuff that's like 5 to 10 years old is going to sit in the place right now, in the marketplace right now. And it's going to radiate out, right? Value, right? So it's going to obviously stuff older, and it's going to have some reflection points back to that. But some of the stuff that is on the newer side, now I'm not going to say it's going to drive the price of newer 1 and 2 and 3 year old stuff. What I am saying is, if this price in the middle gets to a certain point, well, if I can buy a 5-year-old for this, what's a 3-year-old cost, right? And you start having that conversation, you start seeing some stuff kind of moving there. We're going to need some of that to happen, because the best way that you can fill that gap right now is to go find people that want to buy 1, 2, 3, 4-year-old stuff, so you can get 5, 6, 7, 8, 9, 10-year-old stuff in on trade and put it out there on the lot. Or also, if you're a farmer that's trying to do the stuff on your own right now, you're going to have an opportunity to go out and sell that, so you can then have capital to go out and do the other side of it too. So on an upgrade, what you're doing. One thing I have noticed though is that over the course of the last couple of years, which we saw the same thing happen coming out of 12, 13, 14, but this time it's just these cycles that we're in are getting way shorter, but significantly more sharp, right?
Yep.
So like what used to take, we'd have 3 to 5 years worth of good times, and then we'd have, felt like, 4 to 7 years worth of bad times, right. And then we'd kind of go back into it. Well, now it's like these things are compressed down to where they're like 18 to 24 month cycles, but It's just like huge booms and then massive busts, and that's what we're going through one of those right now, right? And watching these things kind of take place, it's going to be hard to see how does that $500,000 used something or $600,000 used something fit into the marketplace right now, when a lot of the people that should be buying those pieces of equipment are struggling to even just have enough capital to go put a crop in the ground this year, much less look at upgrading equipment. And this is getting to be a tighter situation where the number of available buyers are just shrinking drastically every day.
Yeah, and you overlay that with the fact that, what is our raw number of farmers in the U.S. and Canada? It's going down. And what's, the truth with the cost of new equipment? It just keeps going up. And so you've got divergent forces here, and you swirl this together, and it's just, you've said it, we've talked about this going way back 6 months or whatever. It's a new reality. And I wrote a column in Farm Journal 15 months ago trying to gently say, I've never seen anything like this before. And, good or bad, whatever, you pull way back and you think, at the manufacturer level, it's what they want. They didn't want the big, humongous overhangs we used to get, like you said, 4 to 7 years. When times got tight, dealers were, you're just stuck with way too much stuff on the lot. And, but I think we're all just adjusting to this new reality, because farmers, and that's the thing to me, Casey, there's so much generational knowledge in farming. If you're, so I'm 60, whatever, let's say you're 40, whatever, and you grew up listening, whether at the dinner table or out in the barn or whatever in the tractor, what dad says about cycles of business, or grandpa or grandma, and you watch your family, how they navigate. But equipment wise, no one has ever had to navigate this particular configuration of volume of units like we're talking about. That's changing at the top.
Yeah.
By design, So 2 years ago, dealers, where was their focus? It wasn't on selling new. Screw that. We gotta deal with this stuff on our lot. We gotta move this stuff. So we saw the avalanche biggest avalanche I've ever seen in 36 years to auction. They were trying to get ahead of it, quote unquote, which I think they, for the most part, did. And here we are. And so you've got a tight, when dollars are tight, and we're seeing all these strong auction prices, but it's got to be good condition. And like we said, there's more auctions, which you think, well, prices should be falling, but no. So it's just a really unique, we just haven't seen this before. And we're
I mean, it's a unique scenario. It really is, because you're looking at an auction right now. If you the stuff that we're talking about on here every week, the stuff that we're talking about it's hard to find it anywhere else but at an auction.
Yep.
But if you're looking for it, that's really where that's your portfolio.
Right.
What stuff that's going through an auction right now. It's just hard to find anywhere else.
Yep, for sure. It's like you said, when you did that search on the Kubota M9540s, how many of them are there? Which, again, if we step back, compared to 2 years ago, dealers and manufacturers would have been like, oh my God, we just got too much of this late model used stuff, whatever, combines, tractors, and everything. But they dealt with it. I mean, in the most aggressive way I've ever seen dealing with it. And they lost a lot of money. Don't mean to laugh, but my family's in the dealer business. That was extremely painful. But the reason they could do that was because the dealers aren't 1, 2, 3 stores now. They're 20, 30, 40, 60 stores. And at least at the bare minimum, you can begin to, as much as you don't want to, absorb losses like that in the short term and survive and move forward. Whereas before, I tell this a lot, but my dad had 2 stores. And in the 80s, when you had too much used equipment, what are you going to do? Take it all out to auction? Well, guess what? You're out of business. So you hold it, you hold and hope. And at the top level, the manufacturer was like, well, that's not really a healthy system for us selling more new equipment when there's this humongous overhang of late model used. And so over time, through a meat grinder, they just crunched down the number of dealers, which, how long has that been going on? 20 years? I mean, 20 plus?
25 plus years, yeah.
No. Now here we are in
Late
2026.
2000.
You snap your fingers and well, how many dealer groups are there versus, that last downturn we talked about, 12, 13, 14, 15. And what you can do now, how you can deal with downturns, we saw exactly how it's different now 2 years ago. They got after it. They got ahead of it. And so my concern on the farm side is that we're already stretching out the life of our equipment lines. And we could do that because a lot of farmers had a lot of new equipment, so to speak. But if this goes for another year or 2 or 3, it's problematic. So I think everyone's adjusting, manufacturers, dealers, farmers. And again, the one, I guess you could argue, oddly a positive thing is the uptick in auction activity has created avenue for what farmers need is the best quality used they can get their hands on if they're not buying new. And you can see these auction prices we talk about every week are like, wow. How can that be when times are tough? Well, economics, everything is at play. Supply and demand is a real thing there. And the supply side is different than it's ever been.
Yep, for sure. All right, Greg, good place to stop. Folks want to reach out to you, have you come to an auction or you have a speaking engagement, something like that, go to machinerypete.com, the contact site, or check you out on your socials, right?
Yep, exactly. And hey, one advance notice for folks, throw a red circle around July 9th on your calendar. And our friend Alex Kerr with Kerr Auction down out of Mount Sterling, Illinois, he's going to have an auction. They're calling it Historic Tractor Auction. I believe it's in conjunction. It's in Penfield, Illinois. It's in conjunction with, I think it's a 4-day, I forget the name of the show. Been around forever. But we'll be down filming it July 9th. So, and I know Alex is looking for consignments. If you got a vintage tractor and you want an opportunity to really highlight it, and Alex markets the heck out of stuff. So it'll be July 9th. And I'm trying to get the guy that films Tractor Tales for U.S. Farm Report for us to come down and join us. So it'd be really fun. So hopefully you can come join us in Penfield, Illinois on July 9th.
That'll be a very interesting sale to watch that stuff go.
You should come over for that one, Casey. We'd have a lot
Yeah,
moving iron right from the auction. We get Alex in there.
Might have to do that. Yeah. There's a group of guys around down in eastern Colorado that during wheat harvest they have they break out their old combines and stuff.
Oh,
and
nice.
Make a lap around. So
yeah,
that's a pretty neat thing.
Hey, if you think of it, let me know that coming up this harvest season, we'll get more eyes on it, because those are people love that. Those are great activities when folks do that.
Yep, that's pretty very neat. So. All right, Greg, take care of yourself. We'll catch you again next week.
All right, have a good week, Casey.
All right, stay tuned for more Moving Iron podcast after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planter upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast. Got Sean Hackett on to talk about what's happening in the world commodity. I was with Hackett Financial out of Boca Raton, Florida. Sean, how you doing this morning?
I'm doing good. I'm back from a little vacation and, excited to get back and try to make sense of the chaos in the world at the moment. So,
well, when you figure that part out, let me know, and we'll go from there. Speaking of chaos, all right, so your last newsletter you put out, you talked about the stuff you've been talking about, El Nino. It's tracking just like you thought it would. It's coming in the time frame that you think it's going to come in. We're seeing a movement of that. I listened to a few different economists talk over the weekend, and a lot of them were talking about that if this is the super El Nino that everyone's talking about, and how El Ninos affect different parts of the world, that there could be significant amount of economic strife as well as food security strife, just because of so much of the world right now is just teetering on the edge of a lot of different things that are going on. So I guess, Sean, as you're looking at this, how do you think it shapes up the world, food supply as well as economics, when you start looking at this El Nino pattern that we're going into?
Well, first of all, just because we're going to have a super El Nino doesn't mean necessarily that the weather is extreme everywhere. It's one factor, but there's a lot of other sea surface temperature factors and atmospheric factors that we discussed in our podcast we put out this week that refines it one way or the other. We happen to believe that the conditions other than a super El Nino are supporting a more extreme iteration of this super El Nino, especially overseas. Asia is really the place that this is going to be, and central northern Brazil. We think those are the hot spots to watch for extreme weather issues that under normal circumstances would cause significant issues. But when it comes to what's happening in geopolitics, Iran, the Strait of Hormuz, fertilizer, either high fertilizer prices, like India just paid an enormous amount to try to stockpile some nitrogen-based fertilizer, or not getting it at all. Some countries just won't be able to get it all if the Strait of Hormuz remains closed. The first growing season that we see that being an issue would be the South American growing season, meaning I think India's got enough that they can get by. We have enough. I think we can get by. Doesn't mean perfect, but we have enough. It's not what I call crisis situation, but Brazil hasn't bought anything yet, nothing. And so what's going to happen when they go around to buying a bunch? Can they get it? If they do get it, how much will they have to pay? And what does that mean for how many acres they plant? Are they going to apply the same amount of fertilizers they normally would? Probably not. Are they going to plant the same number of acres as they normally do? Probably not. If they do plant acres, which crops are they going to plant? Probably the ones that are less fertilizer intensive, supporting soybeans, maybe not as much corn, right? So starting with South America, that's where the fertilizer issue, to me, is something that could really have an impact. And then you go into we think India has enough fertilizer to get through the summer growing season after what they just purchased, but I don't think they have enough beyond that because don't forget they plant and grow wheat over the winter time. We don't think they have enough fertilizer for the winter crops. So we think that starts to show up for them in the winter crops. Asia overall, whether it's Thailand, whether it's Vietnam, whether it's the Philippines, Indonesia, they don't have, they're not in good shape with fertilizer. China, we think, is okay with fertilizer, but they're not going to have very good growing season weather this coming summer. So when we put all this together, we think that the food crisis part of it is going to be centered over Asia. We think the epicenter is going to be India, the largest, most populous country in the world, now exceeding that of China. We think could have, if you look at moisture during the summer growing season for India, going back to 1850, 2002 was a 1 in 50 to 1 in 100 year drought for the total country from an Indian monsoon perspective. It was an El Nino, and there's very similar factors that we see globally that were in place then that are in place now. And we really feel if they even broach anything close to what they saw in 2002 or any of the other top 5 monsoon failures in the last 100 years, they are going to be in a tremendous amount of trouble because they have so many people and they can't afford to have those people not be fed, and they would be importing just about everything. We already saw them a couple of years back during the Russia-Ukraine crisis. Halt exports of sugar, halt exports of rice, halt exports of wheat. They've loosened them up a little bit here during the last few years on some better production globally, but they would quickly cut that off again, and then they would start importing. So I really feel and I really think everything is going to start and spread from India. I really would follow the Indian monsoon season, which really starts June 15th and runs itself through mid-September. And I think that's where I would be focused on a developing food crisis, weather crisis, fertilizer crisis, and especially how that would spread into not only Asian countries, but also African countries. No African country has as many people as India does, but collectively, if you take the more populous ones and put them in a group, you're talking about like 500 million people. It's right. A huge amount of people that, so anyway, that's where I would focus. We're going to be very fortunate in that El Nino tends to be very, very good for our weather for growing season once we get out of the spring. We warned everyone that the spring would be challenging weather-wise. We warned that we would have drought out west. It'd be an issue for KC winter wheat. We were warned about perpetual frost risk. We've already had a few, and there's another one probably coming on the way next week. We said this would be where the weather issues could prop prices up, and it is propping prices up, especially for wheat that impacts corn. But we think once we get out of May, the El Nino pattern is going to really kick in. It's going to get cooler. It's already going to get cooler in May already. And then the rain's going to start coming. We should have some very, very good weather for the most part. We still think out west where you are, Casey, it could maybe be on the drier side, but without 105 degree temps, if the temperatures stay 85 to 90 at the worst case, I think you're going to get enough half inchers that the crop will get through. The crop will get through.
I hope you're right. We're going to need a lot of half inchers to get a crop.
No, I know. It is dry, but I mean, if you had to dial, how do you salvage a situation like the West has right now? It's no extreme high daytime temperatures and some timely half-inch rains. We think El Nino historically has provided that. It doesn't end the drought, but it would provide enough of a cover to have. It doesn't mean you're going to have a record crop. It doesn't mean you're going to have a trend line in your crop. It just means it won't be a complete unmitigated disaster. It means you're going to have a crop to harvest and you'll have something to sell.
That's good. That's good news. All right, Sean, let's talk about this real quick. So as you look at this El Nino pattern that we're headed into, in your past studies, considering all the stuff going on in the world, and you throw El Nino on the top of that, when you take a look at the livestock marketplace, cattle in particular, how do you think this is going to affect the overall cattle market, and how do you think that could drive that?
With a good El Nino weather pattern, which does start to bring a lot of rain out west, which is where they desperately need the rain and desperately need improved pasture growth and all that sort of thing, where there's a lot of cattle that are in need of that. It would provide the cover for herd rebuilding. That's what it would do. Now, that's a good thing in the long run, but in the short run, it would tighten the market even further. And I actually think, the market might be sensing that we're rallying here. We're staying strong. We're retesting the all-time highs from a few weeks back. I think the market senses that if this El Nino pattern develops like it is, and it delivers what it normally does, and we have the ability to retain animals and feed them cheaply, as you indicated, that's wonderful. We need to do that. We need to stabilize and grow the herd. But in order to do that, you have to hold them out of going to the packing houses. And that means that the only way to increase production is to bring more beef in or to bring more animals in. Obviously, we've been having trouble bringing animals in from Mexico, and that we still haven't decided to do that yet. And we are bringing more beef in, but we're only bringing the lower quality side of the market in. We haven't been bringing any higher quality side of the market in, which we would start to need to do in order to bridge this gap, because it's it's at least 18 months before you would see the leading edge of increased animals and increased production. And of course, what the farmer would absolutely do is increase the weights as much as they possibly can. I mean, I know they're already doing that, and you always think, well, they can only go so far, and every year they add a little more weight every single year, and they find a way to make the animal that much bigger, and somehow the packing houses find a way to process it. So that's where it's at. And on the demand side, I kind of equate this to the orange juice market. The orange juice demand here globally and in the U.S. has been going down for a long time, but it didn't prevent the market from going from $1 to almost $6 at the peak before crashing back down to $1.75. And that all happened when demand was weakening through it all. It's just that supply was weaker than demand, even though demand was weakening. So I keep seeing people saying, "Oh, the strong demand for beef, the strong demand for beef." I think they're misdiagnosing the patient. Demand is not strong; it's weakening. It's just that the supply is weaker than the demand is, and as long as that's the case, that means you have a bullish supply-demand curve, because there's still not enough supply to meet the demand, even though the demand is weakened. We have not gotten demand below supply yet. And so the job of the market will continue to be how long, how high, and for how long do we need to go before demand falls below production and we finally get the market to ease back. Clearly, we have not done that yet. Despite the fact that we're getting clear signs of weakening demand, we're still not seeing the market be able to balance itself. And then, of course, you go into the typical grilling season preamble, as we're doing now. And while maybe the grilling season will be down from what it was a year ago, it seems like the market is saying that we're still going to have more demand than supply. So that's here. Okay. Cattle is a very interesting market. A lot of local market dynamics. Now you go over into Brazil and their beef production is growing parabolically. Their animals are growing very rapidly. I mean, their expansion is unbelievable. And so at some point, that's a global factor. And at some point, if prices get too high here, as they have been, and they start producing more of the high quality beef, which they're doing everything they can to do, we're going to start importing some higher quality beef from them. Then you'll look over in Australia, their prices have been down in the last year because they've been in herd liquidation. because they haven't had very good prices there, and so when you don't have good prices, what do? You get rid of the animals because you can't support feeding them.
Right.
So it's a really interesting market where the U.S. is in this kind of bubble where we just are upside down and we can't get the right metrics here. Now, if we had had a normal Mexican border, if we were bringing feeders in like we normally would have been for the last 18 months, the situation would be nowhere near as dire as it has become, meaning we would not be as high as we are, and we wouldn't be as tight as we are. We would have a lot more animals in the system than we do, but we didn't, and we haven't. And that's the reality of the situation. Clearly, that would be a huge contributor to get that reopened in some fashion. There's been talk about a phased reopening. There's supposed to be a decision that was going to be made before the end of the month. I haven't heard anything yet, but we just need to keep watching if and when we're going to reopen those feeders. Because the longer that we go on and we don't bring the feeders in, the Mexican producers got to survive. And what he's going to do, or what they're going to do, is they're going to find a way to process the animals domestically and sell the beef to us instead of selling the animals. Meaning we're just going to lose the ability to bring the animals in. So there's a very fine line between reviving the feeder market, import feeder market from Mexico, and losing it altogether and not getting it back. I think we're pretty close to that. I think we're pretty close to where if we go another 6 months, I just think there enough infrastructure in Mexico will have been put in place where they're just going to say, guys, we're vertically integrated now. We've decided we're going to process our own animals. We're going to sell you the beef instead. The animals aren't coming. And then it's going to be a permanent shift in the dynamics of how this works. And maybe in that context, then the herd doesn't ever really grow again because we just import the beef from Mexico for the animals that would have come in the first place. I don't know. We've not been down this road before, but that's my speculation that I do think something needs to happen very quickly if we're to maintain any semblance of what used to be.
Yeah. That seems to be a theme lately. A lot of roads that we haven't been down.
It's for sure.
Popping up.
It really is. I mean, it is amazing how many roads, like we've not been down this road before. We've not been down this road before. And the dairy industry, breeding to beef cows and the aging of those animals, retaining them for longer. And now the reduction in milk per cow efficiencies starting to fall. I mean, it's just things that then you have the GLP-1 drug boom going on. About 40 million Americans taking GLP-1s, demanding and craving protein of all kinds. DFA just introduces new cottage cheese protein product. They can't keep it on the shelves fast enough, but they don't have enough cottage cheese to do it with. So really, really unusual things going on in the protein market that we've just never seen before. Another one, never seen anything like it before. So
that's a good segue. So let's talk a little bit about the dairy market right now. And that was the next question I was going to ask you. With rebuilding of the herd, the big thing that's kind of kept the beef market really plugging along and filled a lot of gaps is the beef on dairy programs that we see out there. And it's also kept dairies profitable in a very low milk market right now. Start looking at where that's at. As you look at these dynamic shifts in the marketplace that we just talked about, some things that are leading to a possibility of herd rebuilding and those kind of things. I mean, the beef on dairy stuff does have the opportunity to fill that short-term gap, but start looking long-term. I mean, how do you think that plays into the milk market? Because right now, if you take the calves being sold out of the marketplace, and dairies are in a very bad spot.
Kind of like the Mexican situation. We're in a situation where I don't think dairymen can do what they're doing much longer without really hurting their long-term milk production viability, meaning you have to maintain a certain age of your herd, a certain health of your herd, a certain genetics of your herd. That's not, you just don't snap your finger and say, we're just going to rebuild, it's an ongoing thing. And if you go too long and retain too many animals and they get too old and you don't replace them fast enough, it's really, really hard to get it back. And I think we're getting within the next 6 months, if we don't start seeing herd replacements coming into the dairy market, we don't start seeing them freshen up the herd, bringing, there's going to be some long-term milk per cow efficiency reductions. And in the long term, they're not beef guys. They're dairy guys, and they're in the business to grow milk for the long haul, and their profitability is critically banked on the idea that they can continue to grow more milk per cow over time. And if they lose that ability, then they lose the ability to be profitable, and they can't afford to do that. So I really think the rubber is about to meet the road where they're going to have to shed these animals, and they're going to have to focus more on building the dairy, freshening the dairy herd instead of breeding them to beef cows. I know it's been hard for them to do because the money is so good selling those beef cows, those dairy cows bred to beef. But in the long run, the good operators have no choice but to do it. And I think we're going to start to see that here over the next 3 to 6 months, which will once again change the dynamics of what has been somewhat of a supply supporter here for the cattle market that they're going to lose if they don't start figuring out another way to bring animals in or other kinds of beef in to offset that.
Right on. Well, Sean, appreciate you being in the podcast. If folks want to reach out to you and get more information about what you're doing at Hackett Financial, what's the best way to do that?
Our website is Hackett, Hackett, advisors.com. We have a Twitter page at Faradix11, LinkedIn page as well. Oftentimes we'll throw some of our ideas out there, and that would be a good place to look to check on some of our latest thoughts on where we think the ag economy and ag prices might be going.
Right on. And I'll give you a little plug here, Sean. Anyone that's looking for someone to come to their group and give a good talk, hire Sean. He's got a lot of great stuff. He has a great program puts together. So, Sean, if folks want to hire you as a speaker, what's the best way to do that?
Go to agagspeakersnetwork.com. You give them a call or send them an email and ask them that you're interested in me, and you can work out the logistics of where, when, how, and why, and speaker fees and all that sort of thing. We'll be in Minnesota here in June. We're going to be in Ohio in August. We're going to be in New York in October. We're going to be, we're going to be in Washington State here in December, and we're going to be in South Dakota in December. So these are some of the ones we already have locked in, and we certainly would like to reach out to more folks, especially with all that's going on now. Our presentation really speaks to a lot of these things, and we've been speaking about these geopolitical and weather cycles for a long time, and they're now starting to come to fruition. So,
right on. Good deal. Well, Sean, appreciate you being on the podcast. We'll catch you again next time.
Sounds good, Casey. Look forward to it.
All right, that's does it for this week's Moving Iron podcast. I want to thank Sean and Greg Peterson for being on, talking about what's happening in the marketplace. You can find me on Facebook, Twitter, Instagram, and wherever you might find your podcasts. And you can also go to the YouTube channel for Farm Journal. You can see the video version there, and then go over to AgWeb, and you can see the audio version in there. So with that, I'm Casey Seymour. Let's go move some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.